I'm going to give you guys something that no one is talking about, and that's why I'm putting it at the end of the video. It's for you, okay? Non-farm payrolls came in hotter than expected, but so did unemployment. What does a mixed bag mean for the market? Let's look at the charts. If you tuned into my video this afternoon, you would have seen these big yellow lines, and I promised to tell you exactly what they are. This is the monthly expected move that the options have priced in for the month of September. And all you need to know about these is 68% of the time we do land within this range. It does not mean that price can't doodle outside of it, but when we end the month, 68% of the time we do end within these two yellow lines. So look at that for September. So let's look at the SPY on a daily chart and see what could happen over the next few weeks, okay? Now, we did initially see a move higher into our gap resistance with the data release, but I think it started to realize that non-farm payrolls did come in higher, and some people are thinking that there might have to be some more rate raises, okay? But what I see from here happening, and I've said this for a few days, is we are going to touch gap resistance, and then we are going to pull back into these moving averages over the next couple of days. And after that, once we find some buyers, maybe even cut a little lower, then we will extend again up into the upside, possibly filling this gap, possibly going a little bit past it. And then that CPI report, September 13th, mark your calendars, because I believe that that will be the catalyst that really shakes up this market and gives us that big initial downturn by the end of September. Now, what this would do is give us a nice little 1, 2, 3, 4, 5 leg upward that would then give us enough time to get into that catalyst of the CPI where the rug is then pulled and people are trapped up in these levels. Now, going into a little shorter time frame, the 2-hour, we can see that we are trying to do some sort of consolidation in order to possibly move higher. Now, this pullback could be as small as right into here, but I still believe that we are going to need to go and find some buyers, which will most likely be somewhere more into this area. And then after we are able to find some buyers, I believe we are going to see a nice big V that will lead up into the CPI. People will get some FOMO, thinking that there's no way that they could raise rates, and we'll cross through here, giving us a nice little trade. Pay attention to September 13th. I believe the CPI is enough of a catalyst. If we can prove that inflation is coming back into this market, it is enough because we are so extended to then rip us down to the downside. Sure, we got this pullback and now we're making a move upward. I believe it will set up a lower high overall, and we will see more, and if not vigorous, moves to the downside, because people don't expect this market to come down. Think of everything you're hearing now. People are already talking about all-time highs again and stuff like that. So once the FOMO is set in, that is when the trap is set, okay? A stock that I always like to cover, I cover it in most of my videos, is Apple. Apple is known to lead the market, and look at this. It is just ripping higher, and we're getting some funky candles now. Right around this resistance zone here, we are seeing those funky candles. I expected it to possibly touch this zone, come out of it, and then rip back up. That's not playing out, but I still believe Apple is just like everything else, except it's a little stronger, so it might not pull back as much. It might just come down into here for a couple of days, which might be enough to go find some buyers, and then it could rip higher into the top of this resistance, which is the gap fill, maybe even fake people out by going a little bit above it, and then we will see its face absolutely torn off and crash all the way down. Okay, and I'm expecting Apple to hit this around 158 possible, 157 level by the end of the month. Whether or not that's plausible, you know markets, they like to go up and down and bounce and have these funky bounces. So we'll see if that plays out. But right now, that's what I'm seeing. That's my overall thought process. On the smaller time frame, even bulls should want this to pull back a little bit and find some buyers, because you are seeing no pullback in here whatsoever. It's just slowly, slowly walking like a man that's about to jump off a cliff. And we don't want it to jump off a cliff. We want it to kind of come down, consolidate a little, and then go right back up, possibly testing the top of, or this gap fill actually, right around that CPI date. We then can look at smaller, even smaller time frames and possibly see some divergences. Maybe one shows up on the 2-hour, a very small one that you can catch. But overall, we still see the end of this after CPI to come down. And I don't have the seasonality in front of me, but the VIX is actually known to spike halfway through September based on the seasonality. So that 13th of September could be the perfect timing mixed with a perfect catalyst, mixed with a market that is overextended to then give us a big rug pull. Okay, so pay attention to that timing of September 13th. I can't stress it enough. I feel like it is very, very important. I'm going to give you guys something that no one is talking about, and that's why I'm putting it at the end of the video. It's for you, okay? TLT. This is TLT on a 2-hour scale. We actually had a wedge drawn here, which I played to the upside, sold it about here, but I told you I'm expecting TLT to come up into this at least $99 range here, right into that resistance, okay? But in the shorter time frames, in the meantime, I told you guys, I warned you last night, there is some big divergences on small time frames that could lead to a pop in the 10-year yield and a drop in TLT. And this was a sudden drop. You're talking about almost 2% in a day. 2% in a day is pretty nuts for bonds. Now, this is a learning channel. If you look at this chart, is there any kind of pattern that you could maybe make up in your mind based on my drawings? That's right, there is a head and shoulders here possibly forming, okay? So on the 2-hour, we are actually seeing a possible head and shoulders formation. That is a terrible R. But right now we can see a little left shoulder forming, a big head, wish I didn't say that, and then a right shoulder possibly forming at the same level as the left shoulder. And the funny thing is, even if this thing wanted to come down into this area, we would still consider it a head and shoulders pattern, which will then launch it up into this resistance zone. That actually would add up because that would lead to a small pop in, or a small drop in stocks in the short term, and then a pop because that yield is going to back off. And we're going to land right in this resistance zone. The overall measured move for this is about 102, but I believe that this is enough resistance in here to make this sell off. As you can see, we saw support in this zone, 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 support. Oh, and then look, what do? They gap below the support to then cause a huge sell-off, okay? So that's what they like to do. We could even see a gap up here and keep going, but overall, that resistance zone is very important, and I think that we are going to be attracted to it. And then around the CPI data, that's where we see the final drop in TLT, which I believe is heading towards about $89. Based on that in TLT, if you come over to the 10-year yield, we can easily see that this thing popped today, and we called that, so good job. But I think that this might stay even for a couple of days, maybe even head a little higher, which will cause some pullback in the market, and then something will happen or some talking point will be said, and this thing will end up coming back down into its channel, if even like overthrowing it slightly to trick people, and then it will launch up past these previous highs. Okay, once it gets past these previous highs in here, that's when things get really scary. It really shakes people up in the market because as you can see up in here, we have no data. That means that this is the unknown. And if you're like anyone else, you get scared of the unknown when things like this start happening. But pay attention, maybe mark that as a limit just so you're notified when that happens, because when that moment happens, we are going to see some very, very fast selling to the downside. And I can't stress that enough. Around that CPI date, it is enough of a catalyst with the seasonality to cause major selling. And you don't want to be caught in that trap that they're going to set. It's going to be a big one. Lastly, the VIX. Now, we need the VIX to spike in order for these things to happen, but we did not see that today. I actually thought that we would see a little bit of a spike in the VIX, but people just aren't that scared. So maybe next week we do get that tiny pop in the VIX to come up possibly into this trend line, if not just some moving averages, and then we pull back down into these lows to then test these lows again on the VIX. And maybe at that point, we see a nice tiny little divergence there and we rocket past 20. And I've said this for a couple of days now. When I say it goes above 20, I don't mean it goes to 20 and comes back. I think it is going to go above 20 and it is going to stay there for weeks. We are going to see volatility come back into this market because people don't believe it can come down. We are in a bubble and rates are still high. So these are two things that people are blind to, and it is going to cause some major selling to start. So what's the overall takeaway from this video? A mixed bag can be confusing because you got good news and bad news. But what I've noticed in my years of training is those things usually even out in the middle at some point. And then the overall trend that's happening right now will continue, meaning we will continue to the upside, but in the short term, we might see a small pullback. Okay. So I do believe we are going to go up into that gap fill. And then right around the CPI is when that may happen, and then we will see the rug pull. So those are my overall thoughts, and they are slowly starting to prove themselves in the charts. Now, if we do get that pullback in an extension higher, we just want to be watching for those rocks that are being thrown in the pond. Like I said, trade like water. Look for the rocks that are coming in front of you and flow around them. But overall, go with the stream. Once that trend changes, you do not want to be trying to call for bounces. You want to be part of the downside, not the upside anymore once that change occurs. Hopefully you guys found something helpful. If you did, like and subscribe because I'm putting out one or two of these every single day. And I would really appreciate any kind of feedback in the comments, or if you guys just want to discuss some stocks back and forth in the comments, I love doing that too. I love talking about this stuff. So I hope you guys have a great rest of your day. Stay safe out there. Peace.